I have talked to many boards where they feel like they're getting delivered a package of information that's maybe an inch or two thick of financial reports to look at before the board meeting. If rather than trying to impress board members by providing a stack of financial reports, doing the inverse, which is giving board members fewer financial reports that they can take action from, is what should be the gold standard in this industry.
HOA Insights, Common Sense for Common Areas, exists to help all 2 million volunteer board members nationwide have the right information at the right time to make the right decisions for their future. This podcast is sponsored by 4 companies that care about board members: Association Insights and Marketplace, Association Reserves, Community Financials, and Kevin Davis Insurance Services. You'll find links to their websites and social media in the show notes.
Welcome back to Common Sense for Common Areas. I'm Robert Nordland, and I'm here today with an expert on the Community Association financial management who we've enjoyed having as a guest expert on some of our webinars. Board members usually come into their leadership position with little financial training, leading to blank stares and confused facial expressions when it comes to looking at the monthly financial reports. Well, we want to eliminate that. That's dangerous for any business, especially a nonprofit running on thin margins. This is episode number 16, and before I make the introduction to our guest expert, I want to encourage everyone to check out episode number 15, which was another great discussion with regular co-host Kevin Davis on another interesting aspect of insurance coverage that will help you make better insurance-related decisions at your association. So today I'd like to introduce you to Russell Munz of Community Financials, a firm that provides the financial management services for the self-managed and professionally managed community associations all across the country. Community Financials efficiently and effectively takes the burden of assembling the financial reports off the shoulders of the board or management. Now, Russell started Community Financials in 2018 after many years in the community management business. So it's our pleasure to welcome Russell today to Common Sense for Common Areas. Welcome to the program, Russell.
Thank you, Robert, and thank you for that introduction. Glad to be here.
Great. Well, why don't you start out by telling our audience what led you to start Community Financials?
So I started off as a community manager, worked my way up to become president and co-owner of a large regional management company. And over that period of time, I met with hundreds of board members. So that was, I think, 16 and a half years. So I met a lot of board members, and I'd always say, why are you looking to make a change in management companies? Because at that point, I was running a management company. And they would always say two main reasons were the themes. So one, the manager was poor at responding to them. So poor communication. Nobody picks up the phones. Nobody answers emails. And so there was lack of responsive communication. That was the first thing. The second thing was the financial reports either didn't show up on time. There was no transparency. There was no approval of items prior to them actually money being spent. Bills were getting paid late. Statements to the homeowners for their dues were not sent on time. There was no follow-up on late payers. And so they lost trust in the accounting or the financial aspect of management. And so when I left the management company, I wanted to create a business that took large management company systems and processes and solved those two problems in this industry. And so I set out to provide very responsive communication to inquiries and then provide transparency to allow the board to be able to look up information themselves, have that control over their funds, and by approving invoices before payments are made in a seamless way, and just get everything done on a timely basis. So I'm a former Army captain. I like to have kind of everything happening, in a sequence. And so I try and bring that order to what could be a chaotic process. And oftentimes, not to any fault of the property managers, when they're working on it, sometimes they started off as an individual technician, and then they got into, now they've got 10 or 12 or 15 properties, and it's difficult to do the accounting as well as going on site and taking care of all the challenges. So they might need some help. And so sometimes we have customers that split it, do the management from the accounting. And then we've got boards where, probably a third of all homeowner associations and condo communities are self-managed. And we've got boards that are, volunteer doing it themselves, but they're might be burned out, from a lack of a better word, doing those themselves. So we step in and we help out and provide the transparent systems, upgrade their systems, then provide great service, because the board member typically has a day job and is unavailable to homeowner inquiries during most of the week.
Right. Well, we understand the pressure on the community association management business, because the associations themselves are nonprofits. And so the management companies compete on price. And the way they do that is by, as you suggested, having managers be very busy. And the managers I know are the best ones are human factors managers, the people who know how to work with boards, how to help keep peace at the association, help them to move forward effectively as a team. And that's not necessarily the same financial background skills that you may want to look for. And so I appreciate what's going on here. I appreciate some of those factors. And the same is true for the board members themselves. As you suggested, they're busy. They have other jobs. They have families. They have other responsibilities, and they don't necessarily come to the table well equipped to know, how am I going to run this? Well, if you take the value of the real estate, a multi-million-dollar real estate corporation, what do I need to know? And I appreciate that. I don't think I knew that you had a background in the Army. Thank you very much. And that explains your desire for order. When we put things together, know where your assets are and have them accounted for, those kinds of things. So, and then clarity with the association, understanding your numbers, having the mysteries disappear.
In my experience, the number of times that a community lucks out and they have a retired CPA as their treasurer is very few times, right? So maybe 10% of the communities listening are the lucky few that have somebody that know numbers. And, how about when they have a property manager? How many times is that property manager going to have a background in being an accountant?
Right.
So very few times also. And so it's trying to make the numbers tell a story and speak to the board so they can take action with what they're being shown without feeling overwhelmed.
Right.
And that's also part of what drives us.
Yeah. Well, even with the lucky associations that may have someone in the financial services industry on the board, that's still just one person, and a board member is a team. So my desire would be to help with this podcast, help our board member listeners understand, how can I be a little bit better? How can I be aware? And that's what I want to accomplish in the next few minutes here. So every board member is able to look at the numbers and comprehend and know what they're telling about their association. So Russell, lead us forward. We talked about timeliness. Let's presume that your management company, your in-house treasurer, whoever is doing your numbers, at least gets them there in a timely manner. What are you looking for? If you're a words people, if you're a people person, and someone hands you the financials, hopefully you get them a few days before the board meeting so you're not coming in cold. But what are they? And then help turn that black and white into color. How do they start to come alive?
So first I'll say it's important for board members to understand their financial reports, because it is going to tell that story of the community. And, we're all talking about organization on a fixed income, just like if any one of the homeowners or board members on a fixed income, right? Because earnings is not infinite. The board is dealing with a fixed budget. So the main thing that we're going to be looking at is, are we collecting our money from homeowners? Are we on budget? So are our expenses tracking with what we which we budgeted for. And so it kind of gives a dashboard of letting the board members know, do we need to put on the brakes for expenses in this one category if we take a look at the income and expense report? And do we need to do a special assessment if we went over budget for, like, say, snow or some storm or insurance that increased that wasn't expected when we originally did the budget last fall? So if the realities changed, what do we need to do about it also? And do we need to, assess people now so that we make up the shortfall, and then we're not taking money out of the reserve account, which we're not supposed to be doing because that's earmarked for capital improvement items. So the importance of the financial reports is to make better decisions as a board where they need to spend some time and attention. And so let's
say that again.
Tell a story.
Yeah. The bottom line is help the board make decisions. It's not just some numbers and you look at them, you say, I saw them, let's move on. But it's the information that helps you know, are we on track? What's the pulse of the association? What happens when we go to the doctor's office? They put us on the scale, they check our blood pressure, they check our pulse, just those basic things that help the doctor know, okay, what's going on with this person. And that's the financial reports for the association, right? Just the basic information. How is it doing? Okay, so walk me through. Do you want to do these one at a time, or how do you want to take us through, Russell?
Sure. Well, I'll first start off by saying I have talked to many boards where they feel like they're getting delivered a package of information that's maybe an inch or two thick of financial reports to look at before the board meeting, and then their eyes glaze over and they don't have the time for that and they don't know where to start.
Right.
I've also been at organizations where I've overheard them say, well, we'll just, they're asking for information, so we'll give them tons of it. We'll let them sift through it. And, that could be good or bad, right? Because there's plenty of information. But I think, if rather than trying to impress board members by providing a stack of financial reports, doing the inverse, which is giving board members fewer financial reports that they can take action from, is what should be the gold standard in this industry. And so then you take a look and see what financial reports should they be looking at. If you have a limited amount of time as a volunteer and you only want to take a look at a handful of reports to make sure that the association is on track, and then that health check is the patient is still doing well, we're going to take a look at, I'd say, my four top reports. So it would be, one, you're going to look at your balance sheet, which is going to show, it's a snapshot in time of what assets are of the association. So you can take a look and see, okay, what's my bank balance? And sometimes you can track on the balance sheet what you have earmarked for particular capital improvement projects. Have we saved enough for those improvement projects? How much do we have in the reserves versus operating? So that's a great place to start. So you can see how much money you had in the bank as of the end of a period.
So do you compare that when you get that? Let me dial this all the way back. So it may be as simple as almost 4 sheets of paper, and each one has a different purpose that are kind of complementary as they come together?
Yes. Okay. Rather than being overwhelmed by 50 sheets of paper or 60 sheets of paper, if you boil it down to just these reports, you'll get a great sense. And then if questions arise, then you can go deeper into the other reports that are supported, in my opinion.
Right. So with the balance sheet, it's going to tell you how much money do we have, and I would imagine then it's appropriate to compare it to last month to see if we have more or less or about the same?
Yeah, you can take a look at that and also see your liabilities too, right? So if the community has a credit card or if they've got a loan. And so you can kind of take a look at your liabilities and
your outstanding obligations, like if you owe $50,000 to the roofer for the last payment on the roof project.
Maybe it could be accounts payable outstanding as a liability if that hasn't been paid, right? So that could be on there, but and then also, if you, like I said, if you had a credit card, did the credit card balance go up? If you had a loan, did the loan balance go down? So you can compare those things and see how you're tracking.
Got it. So that's the purpose of the balance sheet.
Right. Next up, I would say And this was my favorite tool as a property manager. And I think the best way to operate the community is to look at the comparative income and expense statement, which shows the income and the expenses for a given month versus the budget and any variance for that time period. And then also has the actual year-to-date total of all the income and expenses, as well as the budget and any variance. So you can see for those line items, say you have the income and you're looking at your dues. You budgeted for collecting dues of $100,000 in this period, but you only have $80,000 worth of dues. So there's a variance of $20,000. It makes you say, okay, let's take a look and see why we're not on budget for collecting the money that we're supposed to be collecting, because again, we're a fixed budget association.
So if I can just stop you there, that maybe we'll put an asterisk on that, because that's probably going to point us to maybe the age delinquencies.
That's right, which is one of the other four.
Yeah, okay, we'll get there. But
yes,
visually, if I close my eyes and I'm thinking of that income and expense statement, or I think of it as the budget, it's classically like maybe 4 columns: budget to actual for current month, current period, and budget to actual for year to date.
Correct.
Plus,
we
and
had
maybe
two more columns for the variance for those periods. So which is the difference between the actual and the budget. So that variance or difference. And so if you're at an expense, say you look at your landscaping expense or your water bill, and your water bill, you had budgeted for, $5,000 for the year to date so far, and you were at $8,000. Well, that would be a good place for you to go and take a look and see, okay, did the water rates increase that much, or is it possible that we have a leak underground, or maybe somebody's toilets are running, or some other place where water is leaking out, and so the money's leaking out of our budget.
Right.
So it allows you to kind of research a little bit more. And I would just aside on that, you can't believe the number of times I've had boards tell me, we had water bills that, we spent twice as much on water bills. We weren't aware of it. And this is the way that you become aware of it. You look specifically if you've got old pipes that maybe you had some work done at the property, a roofer drove over a pipe, and then it's underground, it's leaking because you didn't see it because the roofer drove a truck over the pipe and it broke, and to be able to get to the roof. So by looking into the numbers a little bit more, you can ask some questions, and then you can catch things earlier and prevent them by the end of the year being, enormous expenses. Is your HOA or condo self-managed and you don't want to work as hard volunteering? Are you full managed and looking to save money? Or are you looking to split the accounting from a manager's role for better service? Let Community Financials handle the monthly accounting for you. We collect dues, pay bills, produce financial reports, include portals, and help with other support services, all while providing awesome service. We'd love the opportunity to help you make your community accounting stress-free with our industry-leading systems and expert team. Visit our website, communityfinancials.com, to learn more.
Yeah, so you catch them at the current interval. You say, oh, this is way over, this is way under. You see that difference between the budget and the actual, and then you can look. The first step would be to go to year to date, and because maybe some of them just vary from month to month. And then you can do your investigation, and that would be, in the case of the water bill, it went high, check with your landscaper, or do a test on it. Is the timer broken? Is it on 24 hours? But anyway, it allows you as a board member to get back to the basic. It allows you as a board member to be able to make decisions, ask questions and make decisions to move the association forward.
Yeah, these financial reports allow the board to make better decisions because they're informed decisions, and you can make the decisions earlier, not be a victim at the end of the year saying, oh my gosh, we were over budget by $50,000. How did this happen?
Well, you had 12 opportunities at monthly intervals to look at the...
But if you're overwhelmed by looking at all these other reports and you're kind of confused, it might, you might not take the time. But if
Right.
you're laser focused on looking at a handful of reports, you can do that in 10, 15 minutes.
Excellent. That's what we're looking for here. So the income and expense is, some people might call it the budget. You look for the variances,
And again, you can compare the variance for the month, but you're also look at the variance for the year. If you're still on budget for the year, you're probably in pretty good shape. You can take a look at the month first.
Excellent. I like that.
So the next up we alluded to it earlier, is that age delinquency report. So when we're looking at the income and expense report and we see that we're not collecting as much income as we're budgeted for, where we have had like 100% of the owners all paying their fees on time. Now we look at how come we're only at 20% of the fees haven't been collected. So now we go to the age delinquency report and we'll be able to see a list of all the owners that haven't paid, and they'll be in different buckets. So this is they're current, or they're over 30, over 60, or they're over 90. And you can see how long they've owed that money and then the total. And so what you want to see is you don't have many that are over 90, or if they are, they're with your collection agency or your collections attorney to go through that process. But this is going to give you, the board, a chance to look and see, okay, how are we going to use this information to then be the basis of triggering our collection policy actions. So your collection policy is going to be a kind of like the roadmap for when someone's delinquent, what you're going to do. So of course, you've got the late fee gets applied at a certain date. Then maybe there's a late notice that goes out to the owner. Then after a period of time, there's might be a final notice that goes out to the owner, maybe sent certified. And then after that, it gets handed over to the attorney or collection agency to then go through a process of, their process of collections. And in some cases, I would say, and just an added tip, there's the ability these days to also report delinquent owners to the credit rating agencies, which gets their attention and takes the bill for the HOA and condo from the bottom of the must-pay pile to the top, along with the other things like car and mortgage and credit card, because they don't want to get a ding on their credit report. But
right.
So that's the age delinquency report. It's going to help the board have a discussion around, okay, what are we doing for this particular homeowner that now hasn't paid for 60 days?
Well, hopefully, again, we're starting with the financials. We're looking for how it helps with the decisions. Hopefully, the board has made the decision in the past to have a protocol or a policy that then they just know which, I think you used the word buckets, which bucket to have it fall into. If you've got at your association, let's call it unit number 13, who is regularly 30 days late. They're just someone who just has a hard time paying their bills on time. They always get to it, but some months are on time, some months are not on time. You say, oh, gee, it's number 13, not a big deal. You don't worry too much about that. You start to get nervous when it gets into 60s and 90s. Again, you want to make sure that's when you have the policy in place or the procedure in place, and you have other members on your team. You spoke about the collection agency, the attorneys, those kinds of things. And that's, again, just part of running a healthy association, is having a team to support you as the board. So,
and in some cases, I'd also say that, the clock is ticking, because the community, in some cases, in some states, only kind of guaranteed a certain amount of months that the board, they can ensure that they're going to collect from the delinquent owner.
Because if you sit on your hands, the law will not support you.
Right. Yeah, exactly. And then also, so that's the first thing. And then the second thing is, if you get somebody sooner, then obviously the bill is smaller. So psychologically, they should be able to make a payment somehow, or come up with a payment plan before it becomes too overwhelming, and then they just throw their hands up.
Right. If you've got $350 a month of condo assessments, it's one thing for it to be 30 days behind or even 60 days behind. You're $700. But if you let it go for 10 months, you're talking about thousands of dollars, and that can become a problem. And how
you
do
don't
you
want to have that problem?
Yeah, you don't want to have that problem.
So if you're not collecting that $4,000, it's the same as you have going over budget on an expense item by $4,000, because again, you've got a fixed budget and fixed income, and so the money's got to come from somewhere, right?
Right.
Are you going to save extra money by putting off a landscaping project or something else, or what are you going to do? So you want to make sure that you're taking care of your income, but also keeping an eye on your expenses.
Yeah, it's not going to go over very well with the electric company when you say, oh, we would have paid you this month, but we forgot to follow up on our delinquencies. And so, we'll get to that. Yeah, the electric company, they want to get paid. So make sure you protect your income stream.
Of course, you see boards that are very, have a hawk eye for like getting the lowest bid for a vendor. But they need to have that same sharp focus on this age delinquency report because it's the same thing, right? The bottom line is the bottom line.
Yeah, got to protect their income stream. Okay, you alluded to 4 reports. That's 3 so far. Balance sheet, income and expense, and age delinquencies. Number 4.
All right, so I'll give a little color for this one. So another reason why I got into this business was, and when I was running the management company, I had a major competitor where a staff member of that competitor stole money from a number of communities. And it was lots and lots and lots of money. And the way that they did that was they did not provide bank statements and they did not provide a bank reconciliation report. Those are things that, of course, is built into our service in order to provide that transparency. But this particular report, the bank reconciliation report, is a report that proves that what is shown on the financial reports is what is on the bank statements. So it's a way of ensuring that you don't have fraud going on at your community. And so, financial reports could be doctored, like in the case of the example I just gave. But they can't be if you've got a report that holds you to being true, right? Holds you to being honest. So
you got my attention with preventing fraud.
You want to have that report, and then the supporting document for that is the bank statement. But basically, it's pulling all the information from the bank and the bank balance. And so if it ties to the bank balance, then that means that your financial reports are proven.
Well, just like you said earlier, with the income and expense, if your income is low, you want to cross-check that with the age delinquencies and say, oh yeah, we have 2 people that haven't been paying now. That explains why our income is down. You want to have that cross-checking, kind of the circle of information. And then when you're looking at your monthly statement from XYZ Bank, when it has a number on it, you'd like that number to, in your words, reconcile with your balance sheet. So again, they're cross-checking and you're getting, can we use the word confirmation?
Yeah, and you're getting peace of mind, knowing that there's no funny business happening in your community.
Cool. So we're talking about income and expense, balance sheet, age delinquencies, and the bank reconciliation. They individually providing you different pieces of information. You can go other places to look for more detail. You can even look in each other as some of those reports kind of cross-reference each other, all for the purpose of helping the board make better decisions, understand what's going on, understanding the pulse of the association. Again, it's take a couple of minutes, 10 minutes. It doesn't take a long time if you know what you're looking for. And I think we made it pretty clear here to help you understand what's going on at your association. So you're not relying on the manager to say, everything's fine, or one board member to say, everything's fine.
Yeah, and when we talk about the board as a collective and as individual members have a fiduciary responsibility to all the homeowners, which elected them, to make sure that the association is fiscally responsible, but also that the money is being used as it says it's being used, and there's no funny business going on. So this fiscal responsibility is part of what the board, part of their duties and responsibilities is to take a little bit of time, and hopefully by taking a look at these 4 reports, it's just a little bit of time, but you're then all able to ask questions, have a meaningful conversation, whether you're talking to your treasurer or you're talking to a manager, where you're able to participate. And then there's also in legal cases where the board has the business judgment rule. And so part of business judgment is being able to read these reports and, ensure that they're operating this community and their balance sheet, their assets, their income, everything in a prudent, business-like way.
What we've been able to cover here in this one podcast should enable them to have that basic information so they can be a participating member of the financial decisions team.
Absolutely.
Hey, last question before we wrap this episode. What does getting a timely set of financial reports mean?
Well, this kind of goes back to why I started this business in the first place. So financial reports are generated at the end of a month, right? So which is best practice bookkeeping, not getting it on a quarterly basis, but getting it on a monthly basis so you're more up to date. Given that, by the time the month closes and you get the bank statements or maybe investment account statements and anything else, you need some time to pull all that together and do your financial reports. So typically that's going to be a couple of weeks, so you're going to already be getting old information, right? Maybe 1 month old information, 3 week old information, but that's much better than the alternative where I've talked with board members that haven't received financial reports in 2, 3, 6 months. And I don't understand how they can operate a community just based off all the conversations we've had so far today. How can they run their community without this information? So
you spoke earlier about...
Yeah, it's very important because you'll be able to stay on top of your collections activity. You'll be able to stay on top of whether you're on budget or not. You'll be able to see if you've got expenses. You'll be able to see if, heaven forbid, there's no funny business with the money, manipulation with money anywhere. So you can catch all of that. And so you need to have timely information in order to make better decisions and to operate the community. And the homeowners want to make sure that you're doing that as well.
If you can have the confidence of the homeowners that the association is in good hands with the leadership, that's going to make a lot of other problems melt away. So in time, on a regular basis, I imagine you're really busy at the first 2 or 3 months or first 2 or 3 weeks of any month?
Yes, absolutely. I would recommend that if a board is meeting, that they make sure that their meeting schedule is the 3rd or 4th week of the month to allow the person preparing their financial reports enough time to close the period, get all the information, do the reconciliations for not just them, but all the other properties that they're working with. And that gives, enough time for them to be able to get the report before the meeting, hopefully by a couple of days, so they can review it and then talk about it at their board meeting.
Fantastic. Thank you, Russell, for taking some of your time today to share your insights about financial reports, answering questions to help board members make better decisions and stay on track. Keep the problems small before they get big, knowing where the money is going, is it coming in, and where it's being spent. Sometimes I think of it as driving a car, the way we do something very complicated, but we do it regularly all the time. We know to swing our heads, we know to look at our instruments, we look at our mirrors. And I think that's what you're talking about here, just knowing what to look for in those 4 simple reports. Well, tell us where our audience can get in touch with you.
Well, thank you very much, Robert. It's been a pleasure talking with you today about financials. I love the industry. I love, educating board members. And so this is right up my alley. Board members and other people listening to this podcast can find out more about us at communityfinancials.com. That's with an S at the end, so communityfinancials.com. And there's also, I believe, on there the top 4 financial reports and a little information about each one of them and some arrows on where to look for information that they can refer to if they wanted to. They could go on to our website and get that tool for their community.
So they could see some notes about what we spoke about today in the podcast show notes and also by going to Community Financials. We hope you learned something today from our discussion that helps you bring common sense to your common areas. If you have a topic you'd like to have us address, or questions you'd like to have us answer in a future episode, please call us at 805-203-3130 or email us at podcast@reservestudy.com. We look forward to having you join us for another great episode next week.
You've been listening to HOA Insights, common sense for common areas. You can subscribe on any of the most popular podcast platforms. You can also watch the show on our YouTube channel. check the show notes for helpful links. If you like the show and want to support the work we do, you can do so in a number of ways. The most important thing you can do is to engage in the conversation. Email your questions or voice memos to podcast@reservestudy.com or leave us a voicemail at 805-203-3130. If you gain any insights from the show, please do us a huge favor by sharing the show with other board members you know. You can also support us by supporting the brands that sponsor this program. Please remember that the views and opinions expressed by the podcast do not constitute legal advice. You'll want to consult your own legal counsel before making any important decisions. Finally, this podcast was expertly mixed and mastered by Stokelight Video and Marketing. With Stokelight on your team, you'll reach more customers with marketing expertise that inspires action. See the show notes to connect with Stokelight.